Warren.
Thank you, Mr. Chairman, and thank you, Mr. Chairman and Ranking Member Crapo. I'm very impressed by the FHA reforms you've put together, and very much admire your having come out and put something to try to solve this very difficult problem. And I just want to ask about some other areas that relate to this. Ms. Galante, one of the things we learned in the 2008 financial crisis is how important it is for different institutions, public and private, to have an accurate assessment of their risk exposure. And as part of that, to be able to aggregate reliable data about the loans they issue or insure. Now, the FHA faces particularly big challenges in assessing risks because of the decentralized program. As you know, the FHA's knowledge about its insurance exposure is only as good as the quality and consistency of the data given to it by approved banks, along with the work it does to audit then, after the fact, the information that it receives. So, as you may know, the FHFA and the Consumer Financial Protection Bureau have been working to put together a uniform mortgage database program to track more loan-level data about origination and performance. And if it succeeds, I think it could be very helpful in mortgage insurance pricing and increasing general market efficiency by making it easier to evaluate the riskiness and profitability of different pools of mortgages. So I just wanted to ask about the FHA's role in that. Have you been participating in that?
Yeah, so we are very interested in this issue, and I will just mention two items. One is that Ginnie Mae, which is this securitizer, so to speak, for FHA, is working on making much more loan-level data available to their servicers, to their investors of those loans, and I think that additional data availability is imminent, and that will be extremely helpful for people evaluating the risk of FHA, VA, and rural loans that are in those.
And have you considered participating along with FHFA and CFPB so that it helps us get apples to apples comparisons all the way through?
Yes, so we are very interested in participating. Good. And I don't want to continue to whine about money and systems, but
go ahead.
But that is a challenge for us right now. We are actually trying to work on. We need some contractual help in order to participate in that actively. But we are very interested.
Good, but you feel like you have adequate authority. You don't need any additional authority to do it. You just need the resources.
Correct.
Okay,
correct.
Good. I want to ask about another part too. Under a recent FHA guideline, it's Mortgagee Letter 2012-22, it appears that homeowners must be currently employed in order to be eligible for certain loss mitigation options. In other words, helping people who are in trouble on their mortgages. And this concerns me because it seems to arbitrarily discriminate against people who live on unearned income, like Social Security, veterans benefits, child support. Am I missing something here, or is what's going on with this policy from FHA?
Yes, I appreciate the concern here. I would just say I have just recently been made aware of this particular issue, and I am looking into it. I do agree that what we are the intent of what we're looking for here in order to be eligible for some loss mitigation activities, including modifications, we do need to see that there is a stream of income that supports that modification.
I certainly understand that.
And so, but I do think this is a reasonable concern for us to go back and look at the employment versus source of income.
Okay.
So we will look at that.
Excellent. Thank you very much. And then in the few seconds I have left, I just want to ask you a brief question about the FHA's role in being counter-cyclical in the housing market. And we had some discussion, and I heard you talking about the tension with premium increases, that as the market goes down, is the time you may need to ratchet up premiums, but then you're behaving in a way that's pro-cyclical, that is making the booms higher and the busts lower. So if you could just speak very briefly to the question of how the proposed legislation would affect your ability to be counter-cyclical and thus help us both tamp down a little on booms and help us even out a bit on busts.
Yes, I appreciate the question, and it is why I think the current Section 7 is pretty inflexible about when that premium increases must be put in place, and we think that will hurt in the countercyclical situation if we're at a place where we've already, for example, raised those enough to be covering our risk, and we have other tools to get to the same place. That we should be looking to those other tools as much as possible.
Okay, so you'd like to see more flexibility
Yes.
there. Thank you very much. Thank you, Mr. Chairman.